Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it more to come, and we'll talk about that in just a minute. I do not believe that this correction is over, and then we'll see, does the correction turn into the beginning of a bear market, or does the bull market resume for one last thrust to the upside? But either way, I don't believe the correction's over yet, and we'll talk about that. All right, so we're going to start off here. Look for this week. Today is Sunday morning on October 10th, 10:10, early in the morning, and we're going to take a look here at the Dow Industrials, the S&P 500, and the Nasdaq Composite weekly charts to start off. You can see the Dow was up 420 points for the week, a little bit of a bounce back, but the candle was an inside bar to the previous week in here. So it really just looks like sideways consolidation, choppiness over the last 2 weeks. The S&P 500 was up 34.3, and then if we look at the Nasdaq Composite, it was up a measly 12.84 points. So it didn't move nearly as much. And you could see that the sell-off, the drop-off, been a little more severe. What's going off here with the Nasdaq Composite? Okay, so when you look at this and you see the 17 weeks I've talked about with the divergence, I'll talk about that in a minute. I want to focus on this part right here too, these consecutive closes below that 10-week moving average. Let's go back to the home page. So here we have 5 weeks in a row below that 10-week moving average. That is the first time that's happened since the collapse back here in the COVID-19 crash in February, March. Okay, since that time, we haven't had a single pullback that had anything close to that. Not even all of that, activity that happened September, October of a year ago. So right now, I think we've got some pretty heavy-duty selling going on. As you know, we've had it, but it's been up and down and kind of choppy. Now, one of the things that jumps out at you right here is the 17 weeks. What are you talking about? Well, what I'm looking at is the divergence that's showing up in here between the peak and momentum measured by my RSI indicator, and I use a 10-bar RSI. That peak of momentum occurred here the week of April 11th, and from that peak to the peak high in August of the week of August 9th, or I guess actually the week of August 8th, it was 17 weeks. Well, how does that compare to the previous tops? Let's just look at the last two, 2007 and 2000. And to do that, let me shrink this down a little bit. And what I'm going to do is I'm going to look at this. Go back over here to 2007, and here I've got it identified. 19 weeks from peak of momentum to the peak in, interestingly enough, a peak the week of October 7th in 2007, 19 weeks. And then if we go over to 2000, the peak actually was a lot longer, 36 weeks, and it started with the week of May 2nd, 1999. So from May all the way to the peak in the Dow Industrials, the week of January 9th, 36 weeks. So here we are. We're in that zone for the potential for a all-time high, all-time peak in here of the bull move. We'll see what happens. Right now, I'm defaulting into saying, that we're in a corrective mode, that we've had one major correction right here. This could very well be the second one. There is another alternative to that. I have talked about that in the past, but I'm going to stay with just the corrective pattern until this thing starts to get really, really severe. So far, it hasn't done that. So far, we haven't seen really severe breadth and volume movement to the downside. We'll see what happens over the next couple of weeks. We got a lot of things that are on our plate now, and our earnings season starting this next week. Let's take a look at the Elliott Wave picture that we got here on the Dow. Here's what I've got. This is the most bullish scenario. But I don't think that this is done. Okay, we've only had from the peak week here, the week of August 8th, 2, 4, 6, 8. We've only had 8 weeks down. I think we have at least 5 to maybe 7 or more weeks to go, but I think we have at least 5 more. So to me, the most optimistic view of this, and I'm not saying it's going to be straight down, but I'm talking about before the wave 4 bottoms, I think we have at least 5 more weeks before that happens. And that would mean be like mid-November at the most optimistic in here. So that's my projection right now. We'll see if that plays out. As you can see, in terms of a corrective, let me even just take it off of the semi-log so you can see. We got close to 23.6% on the pullback a couple of weeks ago, but we didn't quite get there. That is still very, very shallow, because when you look over here at a wave 2, we had a shallow correction for wave 2 to begin with. Normally a wave 2 is a deeper one. So if we look at this as, say, rule of alternation between wave 2 and wave 4, if wave 2 is shallow, you look for wave 4 to be deep. If wave 2 is deep, you look for wave 4 to be shallow. So that's what I'm watching for, a little bit deeper. And even a normal length wave 4 in terms of a correction would be 38.2%. That'd put it down here around 32,000 on the Dow. So that's what we're looking at. Those are the parameters I'm looking at. A wave 4 that could go down here as low as 32,000 on the Dow, and another 5 weeks to go in terms of the corrective activity. Let's take a look at the daily chart, and you can see where we're at. Here's where we're looking at. So right now, I think we either had an X wave and we're doing another ABC, another corrective move to the downside of a little more complex WXY corrective pattern, zigzag connecting to a possible zigzag, but it could morph into something else. Okay, you just never really know for sure. The alternative in here that I'm looking at is that this could be all part of a bigger X wave. Okay, a 3-wave X wave in here, and then we come down. So either way, in terms of what we're looking at, oh, I know what I wanted to show you too. So let me go back to this. Here's what I'm looking at. This pattern is still holding. Okay. Yeah, we bounced up on Thursday and Friday, and then we paused on Friday. Okay, the market was down 8.7 points on Friday, whopping, after it got stunned by the jobs report Friday morning, right? Stunned. 194,000 new jobs for September, when the market was expecting 500,000 after the stunner in August. So now we've had 2 back-to-back stunning jobs reports, and everybody's like, what does it mean? Are they still going to taper or whatever? Who knows? But right now, this pattern, the head and shoulders pattern that we've got in here, is still holding. Now, I'll cancel out of this. If we get a close above this high, then I'm going to say this is failing. If we continue to push up here and we close above the high on September 27th high, which is 3561, let's call it 35,061. We get above that, then I'm going to say, okay, that's off. But right now, this is on, and I'm projecting it down here just based on the head and shoulders pattern to about 31,676. Okay, or let's just say 31,007, just to make it easy in terms of a round number. So that puts a, in terms of what I just talked about, I just talked about 32,000 on the Elliott Wave projection down to a 38% retracement for wave 4. And there goes my voice, not enough coffee here this morning. 32,000 to 31,700. A little more coffee. So there's a little target range for us. Okay, that's enough on the Dow Industrials. Let's take a look at the high yield bond fund. What is it telling us? It's saying risk off, boys. It closed not only on its low for Friday, its low for the week, down 26 cents. So what's going on with this? It's broken this trend line from May. It's broken down out of this range that had been in since July, the beginning of July. And here's how it looks for the week. Pretty negative move for the week, down 65 cents in here. But the focus is on the bar and what is it doing. I mean, this is the lowest close since the week of March 14th. Okay, so pretty negative picture in terms of the price action. The message is risk off. This actually kind of stunned me, actually. When I saw this on Friday, I was like, okay, look what it's doing. And the market's just dilly-dallying. The market's just kind of, didn't do much of anything on Friday. The S&P 500 on Friday was down 8 points. Is that right? Yeah. Yeah, it was down 8 points. Dow was down 9 points. Okay. So, the market didn't do much of anything, but, we got this saying, okay, not very positive picture. Okay, so what's happening with the 10-year yield? Here's what's happening with the 10-year yield. It continues to push higher. It closed at 1.60%. We're pushing right up into that zone that I had identified back in the spring, March, April, where we pushed up into this area here. What is this zone? I identified this zone as resistance for this cluster of trading and this cluster back over here, 2019 to 2020, okay? And we got up into here and then it got repelled back down, okay? So we'll see what happens. Does the same thing happen as it gets back up into the, say, 170, 1.75? Or does it burst through it and head up and challenge 2%? So right now we're getting a little overbought and we got some divergence showing up, but that could disappear if we continue to push higher. So that's what's happening with the 10-year yield. And what about the dollar index? Well, everybody, not everybody, but a lot of folks think the dollar is going to collapse for whatever reason. But right now, this just keeps reinforcing my scenario that says this thing's moving higher. Now, this may change, but as of right now, the dollar has done nothing but reinforce this picture. Okay, what is this picture? The picture is the low in January, and we've come up and in an impulsive pattern to the upside. So right now, I think we're in a third wave of a third wave of a third wave of an even bigger third wave. Okay, so we'll see how this wants to go, but right now it continues to look and act like it wants to track higher. All right, so that's the picture on the dollar index. Now I want to take a look at two stocks that were in the news this last week. Let's take a look at Facebook first. Facebook. Well, Facebook had one heck of a week. Started off their week with a 60 Minutes episode last Sunday night, then congressional testimony by the whistleblower, and then they topped it off with a global outage during the week. Wow. Down $13 for the week. Here's the picture. I think the top is in Facebook. It'd be really interesting to see if this plays out. But right now, this is my best take on this. I think we've had 5 major waves up in Facebook. And let me just adjust this a little bit. Why is that not doing that? That's a little better. Okay. So this is what I think is going on. I think we've had one. The COVID-19 crash was sharp wave 2. We've had a major triangle consolidation pattern from August of last year through February of this year, and then one more push up, and I think we're done. So we'll see the form, what kind of 5-wave move we get to the downside, but that's the picture I've got on Facebook. Now, it's been down for 4 weeks in a row. Let's take a look at General Motors. Wow, GM. Well, GM really pumped the PR machine this week for their investor day on Wednesday afternoon. I mean, they were all over. They started Tuesday evening on CNBC, and then started Wednesday morning. They were all over the TV talking about it, and then they just, continued to talk about it all day long. We'll see a lot of long-term 10-year projections, et cetera, et cetera. And they talked about how they want to overtake Tesla in the electric car market. Right now, the all-time low I've got on here, because GM stock, what was it? This is all the data I've got, and this is a weekly chart. It goes back into where? 2010. I think that is related to reissuance after the 2008, 2009 debacle. But here's the low I've got coming off that March 2020 low. I think we've had 5 waves up, and now we're doing a corrective pattern. And again, I'm just not sure it's done. It's interesting to note that the high back over here in October 2017 of 46.76 almost exactly was hit here November of last year, pulled back down, and then we burst through it, and then we pulled back to that in August of this year, and you could see 47.07 low, very close. So we came back down and retested this. So this was resistance, and then it became support. We'll see if it holds, see if it lasts. But right now, my best take on what's going on is I think we have a corrective pattern that's got more to go to the downside. Let me take a look at the daily chart in here. And here's why I'm thinking that. Because this first A move down looks to me like a 5-wave move. It looks like a leading diagonal pattern for wave A. Okay. And then we've had this pullback in here, which has been a little funky to decipher, I'll admit. My best take is it's a zigzag. But right now, that's what I think is going on. And we're right up in, here's the 2 days. It's interesting, here's the investor day. And it didn't do anything to the 2 days after the investor day. But we're pulled back up into this resistance zone in here, 58.60 to 59.36. So we'll see if this holds, see if it punches through. But I'm looking for it. We're overbought. And we're back up in this territory of being as overbought as we were in June of 2021 and back over here in January and, well, all January of 2021. So, those were the two. And, I guess we had another overbought situation right here in November of 2020. So the bottom line is we are severely overbought at this point. We are hitting resistance, and I'm looking for this B wave to peter out and for the C wave to roll over and finish the corrective pattern. And then we'll see where we go with General Motors. That is my best take right now. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net right here. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.